Welcome back to our Chapter 9 videos. This is our second video. And basically we're going to have one video for each depreciation method and then another video that kind of does all of our last minute things we need to add in. So this is our second video where we kind of introduce depreciation methods as well as kind of get into some details on one of them. And depreciation is not new for us. We did depreciation in Unit 1. This journal entry was on your first exam. It should not be a surprise to you. If you've forgotten about it since then, time to relearn it because here it is back again as promised. Other than this entry, which you're going to see a lot in this chapter, we're going to answer this question, which is what's the amount we put in that journal entry? How much are we going to depreciate? That was in your Chapter 1 unit, so it talked about a little bit in Chapter 3, but we're going to get into that in more detail. So there's three factors that are going to determine how much we depreciate. It's the cost, the useful life, and the residual/salvage value. I'm going to talk a little bit about that now. The cost we just talked about in the last video, so if you're not sure what costs are, go back to video 1. If you skipped it, go back to it. The second is useful life, which is pretty self-explanatory. You know what useful life is. One thing I'll add that's come up in class before is the useful life is how long you expect that asset will be able to be used. Not necessarily how long you are going to use the asset. So if I buy a car that is a 10-year car and I'm planning on selling it after 3 years, I don't depreciate it over 3 years. Because then if I don't sell it, then I've basically made a mistake. I depreciate it over the 10 years, and then after the third year, I can sell the asset. That'll come into play on worksheet 5. The last one is residual or salvage value. That's our estimate for how much we think the asset will be worth at the end of its life. And so if we're depreciating it over 10 years, how much do we think the asset's going to be worth in 10 years? 1,000, 2,000, 3,000, that kind of thing. All these costs, all these factors are considered as we calculate depreciation. So there's going to be 3 depreciation methods we cover in this class. First is called straight line. I call that the easy one. It is very basic and simple. The second is units of production, which is similar to straight line, a little bit different, a little bit more challenging, not super challenging, just a little bit more challenging. And double declining balance, which I consider to be kind of like the most difficult one. It's not really hard, it's just different than the other methods, in my experience. All right, straight line depreciation. So here's our example. We're going to be following this example through a lot of these scenarios. And that's something you should expect to see in your homework and exams is you're going to see an asset presented. And then a lot of times it's going to be depreciated using straight line and then depreciate that same asset using units of production and then do it again using double declining balance. And so you're going to see that here in this presentation as well. So again, pretty self-explanatory. Purchased an asset for $10,000, residual value $1,000, estimated useful life 5 years. Here's our formula for straight line depreciation. Cost minus residual value divided by useful life. Basically, what we want to do with all these depreciation methods is we want to calculate that number, cost minus residual value, sometimes called the depreciable base, and we want to basically depreciate that much. No matter which method we use, we're going to depreciate that much. So for this asset, we have a cost of $10,000, a residual value of $1,000, and so we want to depreciate, no matter which method, $9,000. And for our purposes here, it's cost minus residual value. For example, it's 10,000 minus 1,000 is 9,000 obviously, divided by 5 is 1,800 depreciated every year. That depreciation every year drives us to this journal entry. Depreciation expense 1,800, accumulated depreciation 1,800. Again, we're determining the number in the journal entry. The journal entry doesn't change. Worksheet 2 is a worksheet that just deals with straight line depreciation. It's a pretty basic, again, straight line's pretty easy. So hopefully you crushed worksheet 2 pretty well. Again, once you're done, take a break, do something else, come back for video 3.